Hey everyone, welcome to today's pre-market explainer. Let's dive right into the macro setup for you active traders. Look, futures are uniformly negative this morning. We're trading below fair value across all major US indices. Despite some absolute record-breaking earnings momentum, heavy macro and geopolitical overhangs are totally hijacking the narrative today. Over the weekend, Iran demanded war damages and unfreezing their assets just to reopen the Strait of Hormuz. Washington views these as total non-starters. The president actually favors targeted economic pressure over any military escalation. Energy markets reacted instantly. Both WTI and Brent crude futures spiked nearly 2% on this supply threat. We're also tracking a slight uptick in Treasury yields right now, mirroring all this sudden geopolitical tension. Looking forward, you guys are facing a massive week of critical economic data and debt issuance. Watch these multi-billion-dollar Treasury auctions super closely, guys. They could seriously dictate intraday market momentum. These auctions are squeezed right between highly anticipated July inflation and retail sales data hitting later this week. Meanwhile, corporate earnings remain incredibly robust, even if they're temporarily taking a backseat to these macro fears. With nearly 90% of the S&P 500 reported, our blended growth sits at an impressive 50.9%. At the single stock level, we're seeing a real tug-of-war. Massive corporate catalysts are dragging indices in opposite directions. Berkshire Hathaway crushed expectations and announced a massive $4.5 billion buyback, providing some real bullish buoyancy. On the flip side, an underperform downgrade for Apple is actively weighing down large caps ahead of the open. So with stellar earnings colliding directly with geopolitical shocks, how will you position your portfolio at the bell?